hate many things in life, but I do hate payday loans. We are calling out payday lenders. They deserve to be called out. I have been seeing more and more advertisements of payday loans on my social media, on YouTube.
The cost of living and daily expenses keep going up and doesn't seem to be stopping. Funny how it seems our income isn't moving at the same pace. And sometimes it's hard to make ends meet no matter how many times you budget out your life. And those unexpected expenses can really sneak up on you. And a lot of the times you have the money for these things, you just get paid next week. So here's something I recently found that may help you when you find yourself in times like this. Empower helps everyday Americans stretch their dollars in between paychecks. Save more money and access credit affordably. Empower offers cash advance up to $250 instantly with no interest or late fees and no credit checks. Cash advances from your typical predatory companies could have such a bad impact on your financial status. Empower is completely different. They look into your income and expenses to approve you of an amount that they feel that they have the best chance at you paying them back with. Empower has their users' best interest in mind because they know not everyone's finances look the same. And if you want to learn more, check out the link in my bio and download Empower.
I did a video last year. I don't think in that video I went hard enough in calling them out and really explaining to the depths of what payday lending is. So hopefully this video I can give you more information, because I've seen the way that digital advertisements have made them more enticing, more accessible, and just seem more casual in borrowing. And I'm sick of it. I don't think a lot of people even know that they are payday lending. It's so easy now to get access to payday lenders. So we are calling them out. We're educating ourselves. If this video is interesting to you, be sure to like it, subscribe to my channel, and ring the notification bell so you do not miss out on any of my future videos. Because on this channel, we have conversations about societal's impact on our lives and finances, and how we can take back that power to live more intentional lives and make intentional decisions when it comes to our finances. So if that sounds good to you, subscribe. So hello and welcome to this channel. If this is your first time here, hello, welcome. This is Essential Patience and I am Patience. And let's dive straight into this topic. Payday lending is just a different type of evil in my opinion, and it is one of the worst financial decisions that you can make in your financial life. Payday lenders have long been a controversial lending practice, and they have been called out over and over again by other people. And this is because they continually get criticized about preying on America's poor and most vulnerable. Actually, that was the first time I heard that somebody was taking out a payday loan. It was a lady that was in a very desperate situation. She was about to get evicted from her apartment, and she talked about how she had just gotten a new job, but she needed to pay like all her back rents immediately. I thought she was gonna get evicted. It was still a high possibility that she probably got evicted from her apartment because she was so behind on rent, but she was going to also get a payday loan in addition to her paycheck to make that back pay. But me knowing that payday loans were not the answer and that she was gonna have to make up that money within 2 weeks, and it was very likely that she was gonna get behind, I felt very uneasy about it. But she was way older than me, and it was none of my business really. But I do not like to give unsolicited opinions, but until then, people who take out payday loans are being entrapped into cycles of high interest debt where it can be devastating for their financial future. These lenders offer short-term loans with exorbitant interest rates, targeting individuals who are often already struggling to make ends meet. In this video, we are going to be exploring the history of payday lending, the tactics they use to draw in audience and take advantage of people, the types of payday loans, as well as the legality of payday lending, ethics behind it. But also we're going to give suggestions as to how to stay away from them and how to escape this cycle of debt. Because it is easy to get entrapped in this cycle of debt if you're not financially literate and you don't know your options. And that is often what happens. A lot of these people do not know their options, but beyond that, they don't know simple things they can do in their everyday lives that will prevent them from having to even take out debts in the first place. I don't hate many things in life, but I do hate payday loans. Not like them. I despise them because at its core, I find it to be very unethical and very predatory. And another reason I'm doing this video is because I also knew somebody, this one on a better terms, that was taken advantage of by payday lenders. And that's where I was like, okay, I need to make a second video, because on social media the advertising goes something like, do you need $500 before your payday? Bridget's got you, Dave's got you. You just need to open this app and tap in how much you need, and you can immediately get $500 stress-free. And a lot of people think that they are being helped rather than taken advantage of.
If you need some quick cash, you might want to listen up real quick. So the first thing you're going to do is download this app right here. This company strives to help people get back on their feet. So Dave is willing to pay you minimum $250 in cash advance.
And I, for one, I'm very passionate about spreading financial literacy and reducing the number of casualties and victims that payday lenders are able to attract. If I can, with this video, stop just one person from ever borrowing from a payday lender, I think that I have succeeded. But hopefully there are more people out here that this video will reach that would watch it and send it to people that they know and share it with their friends and family, so that they never, ever borrow from payday lenders. Knowledge is key. So like with all these conversations we've been having, let's get into the history. And it's not a pretty one like some of the other topics that we talk about, but it's always good to know how things start and how they morph into the monster they are. So payday loans actually have their roots starting in the 20th century, so not too long ago, when small dollar lending became more common as a way of helping workers bridge the gap between paychecks. However, these loans were often associated with high interest rates and unscrupulous practices. By the 1980s and 1990s, payday lending became more widespread, particularly as deregulation in financial industry allowed lenders to charge higher interest rates. The rise of payday lenders during this period was often marked by their strategic placement in lower income neighborhoods and aggressive marketing tactics that promised quick cash with minimal hassle. And who are these target audience? Just like we're talking about, typically low income. I remember Dave Ramsey talking about markers of poor versus middle class versus wealthy folks. And something he said about middle class folks, that often they are markers of having an average house, typically 2-car loans, student loan debt, and credit card debt. But then with poor or lower income folks, it is often payday loans and lottery tickets. And that is so true, because when you go through nice neighborhoods, very few times would you ever see signs that says quick cash, payday loans, get check before paycheck. That's not something you see often in many middle class neighborhoods, but you see them a lot in low class neighborhoods. And payday loans target individuals that are often financially illiterate and are already financially vulnerable. And they often have low incomes, poor to no credit, and don't have access to the traditional banking methods such as a bank, credit union, credit cards. So they often settle for this type of credit. This audience often include minorities, single parents, and elderly individuals living on fixed incomes. According to a 2018 study by the Center of Responsible Lending, payday loans are disproportionately concentrated in communities of color, with African Americans and Latinos more likely to use payday loans than any other group. But let me know in the comment section, have you ever driven through a middle class neighborhood and seen payday lending? Or do you predominantly see it in poorer neighborhood? Because even though middle class families and individuals may live paycheck to paycheck, they often have better access to credit and different forms of credits that they can take out to inflate their lifestyle or to help them have access to lower interest debt, such as personal loans and credit cards. And that is not even comparable to the interest rates on payday loans. We'll get there. But before we get to those, let's talk about the marketing tactics. I've told you that I've seen it on social media, but it did not begin there. Historically, payday lenders relied on physical storefronts located in economically disadvantaged areas with neon signs that promised no credit check loans to lure customers. In recent years, however, their marketing tactics has evolved to include online social media platforms, allowing for them to reach a broader audience. These lenders often advertise on the platforms like Facebook, Instagram, TikTok, YouTube, using targeted ads to appeal to individuals searching for financial assistance. They exploit the urgency of financial crisis, promising quick approval and easy money while downplaying the long-term costs associated with the loans. Never in any of these ads have I seen anything mentioned about interest loans. Often they emphasize the fact that you can get this without a credit check, but they never mention that this is the range of interest you'll be paying. Instead they just say, oh bestie, do you need money before your Friday paycheck? Get a quick $250 to help you get there. But they don't tell you how much you're going to pay back literally within 2 weeks, or else you have to pay even more interest. But all payday loans are not created the same. Nope. So let's get into the types of payday loans. Payday loans comes in several forms, but they all share the same basic structure. A short-term loan that must be repaid with interest by the borrower's next payday. The most common types include the traditional payday loan, which is a small dollar amount, typically ranging from $100 to $1,500, with repayments due within 2 weeks. The next type is the installment payday loan. These allow borrowers to repay the loan over several months, though the interest rates and fees remain high. The next one is the auto title loan. It feels like it's getting worse, right? That's not just me. This is a form of secure payday loan where the borrower's vehicle is used as collateral. Failure to repay can result in the loss of vehicle. This is typically where a lot of people will be getting into a cycle of debt. Most people who have payday loans that don't just have one, and this could be part of the reason why, because they're literally putting sometimes their only asset, which is a car, on the line. A lot of these people don't have a house. Some of them are renting, low income, so they're literally putting their car on the line. If they fail to pay, they have no money and they have no car, meaning they need money to buy a new car. That sometimes often leads them to getting another payday loan to use as a down payment for a car. It's a cycle of debt. But the next one is an online payday loan. These are loans offered through online platforms, often with a less regulated and higher fees than traditional payday loans. And sometimes they connect to your bank account so they can immediately take out the money without going through the hassle of the traditional payday loans where you have to come pay them as well. So I have been mentioning the higher interest, higher fees. And if you're not familiar with payday loans, you may think, well, she's kind of exaggerating. But let me tell you why I truly despise payday loans: the interest and the high fees. Payday loans are notorious for exorbitant interest rates. These can range from over 300% to over 600% APY. For example, a typical 2-week payday loan might carry a fee of $15 per $100 borrow, which is equivalent to 391% APR. These interest rates make it difficult for borrowers to repay the loan over time, leading to a cycle of debt where borrowers are forced to take out additional loans to cover the original debt. Paying $15 for every $100 may not seem like a lot of money to some people, but if you got a personal loan, you will typically pay anywhere from 10% to maybe 20% at the highest. Meaning that if you got a $10,000 loan for a year, you'll be expected to pay about $1,000 to $1,500 for that year. The problem with payday loans is that that $15 is due in 2 weeks. So if you stretch it over the year for that same $10,000 loan, which most payday loans are not going to give you $10,000, but just for comparable purposes, you're going to pay anywhere from $30,000 to $60,000. Or let's bring it to the smaller term of, let's say, $1,000. You get a $1,000 loan at the bank. At the end of the year, you're gonna pay anywhere from $100 to $200 for the interest. So in total, you're gonna pay $1,100 or $1,200 for a personal loan. If it's a credit card, you may pay up to $1,400. You are going to be paying $3,000 to $6,000 on that loan. So do you see why it is so ridiculous and it traps people in a cycle of debt? And oftentimes, if this person did not have the money to meet their need in those 2 weeks, do you think that they have that money and more for the next 2 weeks? Probably not. So oftentimes they will take out multiple payday loans, which will be like robbing Peter to pay Paul, but then they will rob Paul to pay Peter as well. So it just goes back and forth. So you're borrowing money over and over again to cover the other payday loans because they didn't have the money in the first place, and after 2 weeks they still don't got the money. Probably wondering, is this legal? Well, let's explore the legal landscape of payday lending. Payday lending is a contentious issue in the United States, with regulations varying widely from state to state. As of 2023, payday loans are legal in 32 states, often with little to no regulation on the interest rates and fees. In contrast, 18 states and the District of Columbia has enacted laws that effectively banned payday loans by capping interest rates at 36% APR or lower. And this 36% APR will make it almost like a credit card, because most credit cards can go up to like 30, maybe 35%. So these will probably be just slightly beyond the average credit card, which is way better than the 300 to 600% APR we talked about. Some states where payday lending is legal includes Texas, Nevada, and Mississippi, where lenders operate with minimal oversight. On the other hand, states like New York, Massachusetts, North Carolina have banned payday lending, citing the predatory nature of loans. And as a person who lives in Texas, I've definitely seen signs of payday lending. So in this next section, we are going to explore the financial traps of payday lending, starting with the cycle of debt it creates. Payday loans are designed to trap the borrowers into a cycle of debt. The combination of high fees, short repayment terms, and borrowers' precarious financial situation often lead to repeated borrowing. Studies shows that the average payday loan borrower takes out about 8 payday loans per year. This averages about 1 per every 6 weeks. This quickly can spiral out of control, spending over half of the year in debt, and can lead to financial ruin. And this is why financial literacy is crucial. Financial literacy is a critical tool in combating the predatory practices of payday lenders. Many borrowers lack the understanding of how payday loans work and the long-term consequences of taking out such loans. Without adequate knowledge of interest rates, loan terms, and the availability of alternate financial options, borrowers find themselves trapped in a debt cycle that is difficult to escape. The impact of payday loans on an individual's financial future can be devastating. Borrowers often face mounting debt, damaging credit score, and in some cases, loss of assets such as their car and even their homes. The stress and financial strain can lead to broader social and health issues, exacerbating the individual's overall health. So now that we've talked about the history, the interest rates, and the cycle of debt, how can you spot a payday lender and how can you avoid it? Because that is very important. And that's what this next section is going to be about. Payday lenders often have tactics that they try to use to disguise themselves as legitimate financial services. But here's some warning signs that you can use to immediately spot them and see that they are just camouflaging. Number 1 is high APRs. Lenders offering short-term loans with high APRs exceeding 36% are likely payday lenders. The second is credit check. When you go get a credit card, car loan, mortgage, they ask you for your credit score. Always. There's something you can do manual underwriting, or if you're paying something in cash, then you don't have to get a check. But if you try to borrow any type of money or finance, they often will ask you about your credit score and run a credit check. But payday lenders don't do that. Payday lenders often promise no credit checks, targeting those with poor credit history and sometimes no credit history. The next thing you can spot them with is short-term loan repayments. Going back to the examples of getting an auto loan, typically those are 12, 24, 36, 48, 60 months. They're typically stretched over a longer period of time to give people enough time to make payments. Same with credit cards, they will give you a monthly minimum. And I'm not saying these are like great to like borrow money from. I'm just giving an example of how it comes off more ethically correct than payday lenders. If you get a mortgage, you can get a 15-year mortgage, 10-year mortgage, a 30-year mortgage. So there's time because they understand that people need time and they want more interest. But you don't go borrow money from the bank and they'll be like, well, pay us back in 2 weeks. No, they'll at least give you like 12 months to pay it off. So that's exactly how you can spot payday lenders. They want theirs within a matter of weeks. And there's often an emphasis on your payday and the day that you get your paycheck. Because the bank doesn't care if you're getting paid on the 12th. If that's when your bill is due, that's when it's due. They're not going to be like, well, pay us by your next paycheck. You know, they don't care. And another way you can spot payday lenders are the aggressive marketing tactics. Lenders who use urgent languages such as get cash now or instant approval are often payday lenders. I barely ever see like mortgages that like get same day approval and get your house now. typically it takes time. Things that you're dealing with legitimate services, they take time because they need to make sure that you actually qualify. They want to check on your debt to income ratio. They want to look at your history of repayments. They just can't have anybody just taking out bigger sums of money. But let's discuss actually one of the reasons why their interest rates are so high. It's because of the type of people they're lending to, because a lot of their customers are lower income. They don't have guarantees that they're going to pay because they didn't do credit checks. They don't know about the history of them paying. Taking them to court can be a very difficult and tasking, especially when you look at the low amount of money that a lot of people borrow. They're defaulting on a few $100s to maybe low thousands versus a lot of banks who will lend you 4, 5, and 6 figures worth of money. So it's worth pursuing. So because of that, they do run the risk of people just not paying, running away. And because payday loans are not reported to the credit bureaus, people may just ignore them. And because of that, they do charge high amounts of interest beyond the fact that they're predatory and greedy, because they know that a lot of people are going to default on the loan. So the people who do pay, they're going to charge them a lot of fees to make up for the people who don't. I did see an article that said that about 80% of payday loans get rolled up into another payday loan, and approximately 20% of payday loans get defaulted on, which is actually not as high as I would have thought. And here's some payday loan companies, some that I definitely found myself, some that I researched, but the first two are the ones that I've been heavily advertised to on social media and on YouTube. The first one is Dave. First time I heard of Dave, I think it sounded like Dave Ramsey, you know, the financial guru who would tell you to never ever borrow money, especially payday loans. Dave, I think in a way was very confusing because it's not very traditional like the payday loans, but it is a form of a payday loan and it's still bad. But when I heard it, I was like, okay, that sounds like a person. So they're playing on that relationship and you're like, Dave is gonna borrow you money, and it sounds like it's associated with Dave Ramsey. I wonder if he tried to sue, but I felt very uneasy about the name when I heard it. And I've gotten so much advertisement from them, and I'm pretty sure Dave Ramsey is sick of it too. The next one is another personable name, which is Bridget. And I've probably gotten the most advertisement from Bridget. Whoever this lady is, just like Salome, she needs to get out of here because both of them are not nice ladies, okay? But Bridget is also a payday loan service, whether it's traditional or non-traditional. I found some information about it, but either way, I don't think you need to invite her into your house. Find other ways. Another one is Ace Cash Express. This might be one that is more traditional, that's not trying to play like your bestie, trying to lend you money till your next payday. Another is, back on the names, Albert. What is up with this trend? I feel like they're trying to play on something, and maybe it worked for Dave or Albert or Bridget, and like now everybody's trying to go by these names. These are people lending you money. Another is Quick to Lend, Stay Away, and another is Chime. But there are several more that I would urge you not to even get close to. Stay away from them. Anybody called Dave, Albert, and Bridget try to lend you money, know that they are not the people you should be taking money from. So how do you avoid payday loans? Now that I've given you their tactics, I've also given you examples of who they are. How do you stay away, and what are your options? The first is, if you really need money, the best thing to do is to seek out more traditional forms of banking, such as getting a personal loan, getting a credit card. And these are not the solution, but they might be temporarily. It's better than falling into payday loans. But I will say this, there are better ways, such as making a budget, getting an extra job for your expenses, planning ahead. These will really help you to avoid payday loans and financing in general, whether it's credit card or personal loan. But if you absolutely have to get money immediately, personal loans are where it's at. And now it's so much easier to actually get personal loans and credit cards. And if you have a credit card that you are unable to pay off, you can also roll that into a 0%, let's say for 12, 24 months credit card. That would alleviate the immediacy, the urgency of paying it off, versus payday loans. You can't roll them over into a 0% payday loan. But I would take a 35% credit card any day over 500% payday loan. So the next thing you can do is build an emergency fund. Just like when you get that budget, just save for an emergency fund. So in case anything happens, you have an emergency fund to carry you through. Typically, financial advisors will always say 3 to 6 months. I lean heavily on the 6 months, but if your 6-month emergency fund is less than $10,000, I would encourage you to at least get to $10,000 because that is a substantial amount of money that can help you weather many storms. And most emergencies that come along the way are not $10,000. You can see by these payday loans that typically people are borrowing anywhere from $100 to about $1,500. So it's not like they need a lot of money. $10,000 is more than enough to help carry people through a few months of emergencies. The next thing you can do is to use some financial counseling services that you can find locally. And these can be nonprofit debt counseling agencies that can help you avoid predatory loans and to help you manage your debt as well, and to make a plan that will benefit you financially in the future. And this is really important that you seek these out and use these resources because sometimes they can be at no cost to you. And the last but absolutely not the least way is to always seek knowledge. Educate yourself, ladies and gentlemen, and don't go blindly into any type of financial contract. People are out here to take advantage of you. Don't give them the way to do so. So seek knowledge, read everything, because a lot of times they won't tell you about the percentage of interest that you'll be paying. So many people don't know how much they're paying on their payday loan interest rates. If they did, they probably would not borrow it. They'll probably find a different way. But if you ever consider this, always read the fine print and know the interest rate, and you will see just how bad it is and how much better alternatives that you have. So educate yourself on how to stay out of debt in general, and if you ever have to get into debt, your best financial options and alternatives beyond payday lenders. They may take a while, it may take a couple of days to get approved for a personal loan or a credit card, but the truth is, good things are worth waiting for. Is a good thing, but at least better things are worth waiting for. And I would rather wait a couple of days to get a personal loan or credit card versus immediately getting a $500 payday loan that I'm going to pay 3 times to 6 times the amount for. And we are at a conclusion. Whew, we're fired up for this one. So in conclusion, payday lenders prey on the most vulnerable members of society using predatory tactics to trap them in cycles of high interest debt. The history of payday lenders reveal a pattern of exploitation, particularly targeting low-income individuals and communities of color. Despite the devastating financial impact of payday loans, these lenders continue to thrive due to the lack of financial literacy among their target audience. To protect yourself from falling into the trap of payday loans, it is crucial to recognize the warning signs, explore alternative financial options, and prioritize financial education. By understanding the dangers of payday loans and making informed financial decisions, individuals can avoid the pitfalls of predatory practices and secure a more stable financial future. Your future is worth it. You are worth it. And you don't deserve to pay 300 to 600% APR on a short-term loan that is taking advantage of you. So educate yourself. Let me know in the comment section, have you ever taken a payday loan? How did you find out about payday loans? Do you even know it? And do you think it's an issue? I hope this video added value to your life. It added some knowledge that maybe you didn't know, or maybe you already knew, but this is giving you more details. So share this video with anybody, friends and family who need this financial education. We need to continue to call out payday lenders, and we need to continue to push out financial literacy to people so they can understand their options and they will not be taken advantage of. The knowledge is out there. The knowledge is plenty, but unfortunately there are people who are not seeking it out, or they don't know what to even look for. So now that you found this video, be sure to share with people and give them the gift of knowledge as well. So with that, I'm bringing this video to an end. Thank you all so much for spending your time with me as we talk about payday lenders, and I call them out with passion and giving you this knowledge to hopefully avoid this cycle of debt. If you enjoyed this, be sure to like this video, subscribe to my channel, and ring the notification bell so you do not miss out on any of my future videos. Leave all of your thoughts and opinions in the comment section, and I'll see you in the next video. Bye.